Ja, hallo, hier ist Michael Adams von Stock-Telegraph. Wir haben wieder einen unserer berühmten CEO-Roaster. Bei mir ist wieder der Joachim Brunner vom Small Cap Investor. Wir haben diesmal ein spannendes Unternehmen, und zwar die Anfield Resources. Da gab es diese Woche zwei sehr gute, aus meiner Sicht, Nachrichten. Einmal ein Update zu dem 43101 Ressourcen Report, und gerade heute gab es eine Absichtserklärung für eine Kreditfinanzierung. Und wir haben eingeladen den CEO der Company, Corey Diaz, live aus Toronto, um uns dort Rede und Antwort zu stehen. Die Aktie selber notiert an der TSX Venture unter dem Symbol ARY, also Anton Richard Y, und in Frankfurt unter dem Symbol 0 Anton Dora, beziehungsweise der Wertpapierkennnummer A1 2A 3A. Okay, I have to start with a really bad joke. So, buenos dias, Mr. Diaz, and thanks for... I had to say that, sorry. So thanks for taking the time to talk to us, especially because I guess it's a really busy day on your end. In my introduction, I already discussed that Anfield Resources has issued two really good news releases this week. One was on Tuesday and one was actually today. One was about the resource update and the other one was about the credit facility. And this is the reason why we invited you to give us more insight on this. So maybe just as an introduction, as a starting point, I'm a consultant to Anfield, and so is Joe Brunner. He's a service provider for Anfield. So you have to make up your own mind, and it might be that if we have some opinions that these are biased. Okay, that was the legal stuff. Now up to you, Corey.
Well, thanks for the invitation, and I appreciate you guys taking the time to chat with me with regard to Anfield and the recent transaction. The press releases you discussed, the first one on Tuesday related to the 43101 compliant resource, and the press release from today, which was related to securing a credit facility, or we're in the process of securing a credit facility in order to close the transaction, I think are both very important steps in moving the company forward. First of all, with the 43101 resource, we had to put a resource in place as one of the requirements related to the TSX Venture allowing us to close the transaction. In order to close any type of transaction of this nature, you need to have a resource in place which shows that there's a property of merit being acquired. The resource was outlined generally by Uranium One in the past, but the actual resource itself had never been filed with any public entity, so we actually had to go back and do the work in order to make sure that the resource was in fact sound, and we were able to do so in a fairly expeditious time period. So we're very happy with the resource. We've confirmed that the resource is what it was claimed to be. And we think that's an important step because from this point on, we will look to place economics on the project once we've actually closed the transaction. Secondly, and related to that, we did issue a press release today related to the financing. We are working with a U.S. lender at this point who will be looking to provide us with the financing, which would not only allow us to close the transaction, but also start moving some of these assets forward. In terms
Corey,
of,
let me ask you a question. Was the reason to go into the U.S. for finding a lender, was that the project is also in the United States, or did you also look in other countries?
Well, primarily it was, obviously, given that I'm from Toronto, we looked at the Toronto market. The opportunities in the Toronto market were fairly limited. I think, as I'm sure you're aware, the TSX Venture has had a significant fall over the past few months, which has made lending quite difficult. Investors are sitting on their hands for the most part, not looking to necessarily invest in new opportunities. So, we thought that going to the U.S., and given that we have U.S. assets, it would be quite appropriate, and U.S. markets would understand U.S. assets. So we've gotten a great reception out of the U.S., and this is one of the reasons why we've chosen to work with groups in the U.S.
How long did it take you to come, like since the first contact yeah, with the lending group. So how long did it take you to come to this stage right now? Is it like weeks or months or?
It probably 2 or 3 weeks to come to the term sheet stage. We had discussions over a period of time, but it started to accelerate pretty quickly once the lender understood the nature of our business, understood the possibility and the opportunities moving forward, not just at this stage, but in the future, moving these products through to production. I think that the lender saw that there could be opportunities in the future for it to get involved with us.
Okay.
Corey, do you find that is maybe the mood also changing against uranium or uranium projects and so on? Or is
sorry, go ahead.
Yeah, no, go ahead.
I was just going to say that the mood against uranium has been quite strong for probably a number of years, obviously since Fukushima 2011. What we found, even in the summer, the mood, the sentiment was quite, was quite negative moving towards the summer. But we've seen a couple of green shoots, I guess you could say, in the marketplace since the summer. Obviously, news of Japan looking to turn back on a few reactors has been obviously positive for the marketplace. The fact that China has been building out a significant number of reactors and needs a significant number of reactors in order to meet demand in the coming years is obviously another piece of positive news. I think that it's been a very shaky market for the most part, but I think given the way that the spot prices moved back up from $28 low, a near-term low or a longer-term low, to close to $40, is showing that there's some more positive sentiment and positive momentum in the marketplace.
Mm-hmm.
Okay. Quick other question on the lenders. Have the lenders, as they did their due diligence, have they been to the project?
No, this is part of the process. They're in the process now of choosing an appraiser.
Oh, okay.
We will know by the end of this week, who the appraiser will be.
Okay. And
at that point, the appraiser will go on site in order to obviously appraise the assets and determine the value.
Oh, okay. Is there kind of a timeline? Yeah. Until the final decision.
Well, our timeline is essentially getting something done by the end of the year.
Okay.
We'd like to be at the stage where we have a lending decision by the end of the year. So,
okay.
I think the lender understands our position and seems to be very comfortable with our position.
Okay. And as far as I understand it, yeah, if you can secure this credit facility, that is like the last missing piece of the puzzle. Is that right? Because you have the 4311 update, you got all this, like this legal stuff, yeah, from the T6 venture, and all these permits can be transferred from Uranium One to you. So that's all in place.
Right. Everything is conditional. So, the 43101 basically moves our conditional approval from the TSX venture to a final approval, obviously pending the other pieces being in place, financing, etc. There's also what's called a CFIUS ruling which needs to take place, and that's basically the U.S. government understanding that they're comfortable with us as a foreign entity owning assets of this nature in the U.S.
Okay.
I think there are a couple of other steps, but the financing is probably the largest one that remains. And if we have the financing in place, everything else kind of falls into place. We've got, as you mentioned, the UDRC has approved the transfer of the radioactive materials license, and that's also pending having the financing in place. So I think
okay.
Everything kind of is related to this financing, and that's why we're very excited at the prospect of having this financing completed.
Yeah, okay. So if you'd like to just run us through the presentation, and I guess we will have a couple of more questions.
Okay, sure. Let's start. I'll start with page 2. Obviously, forward-looking statements, safe harbor. We want to make sure that everybody understands that I'm very comfortable that we are talking about. We'll be talking about some future numbers, but those are all. Those are numbers that shouldn't be taken in isolation, and obviously there's risk to those numbers being accurate or inaccurate. But these are just, and for the most part, for illustrative purposes only, and I think it's very important for viewers or investors to understand that.
It's the usual legal stuff everybody
Yes.
has to go through.
Exactly. Please
Okay.
read page 2 of the
Yeah.
presentation prior to going through the rest of the presentation. So, company profile on page 3. The recent stock price is obviously a little bit lower than what's listed here, but the common shares, we have a very tight share structure, 20 million shares outstanding, 2 million warrants, and 2 million options and warrants in place, which the $2.50 warrants clearly are out of the money, but the other ones have been in and around the money for the past few months. But we're expecting that hopefully on the back of good news, those warrants will be in the money and certainly available to us to put into our till.
How long are these warrants good for? Like, what's the last day to exercise them?
Well, we have some of those 40-cent warrants are due in the end of January, early February.
Okay.
Or expire. The 65-cent warrants are, I believe, in May, and then there are some warrants that are expiring in August.
Okay.
So all of them are for next year.
Okay.
2015. And just the transaction summary. When we talk about uranium in general and nuclear power, the U.S. is a net importer of uranium. It consumes a significantly larger amount of uranium than it actually produces. 55 million pounds generally used a year, and produces 5 million pounds or less every year. So clearly the U.S. could use more production domestically in order to fulfill its needs. Uranium, as I mentioned, was been at a historically low price. The price ran up to over $100 back in the mid-2000s. And has obviously fallen off significantly since then. As I mentioned, $28 earlier this year, but it's started to creep up again, which is obviously setting a positive tone in the marketplace. Increasing consumption, despite all the negative talk about the uranium space, there are nuclear reactors being built today. 72 reactors currently under construction, 28 of those are in China, so China is obviously the leader in terms of pushing this market forward. So you can see that despite all the negative news, construction continues. There are over 430 reactors in various stages, whether it's construction, planning, or proposed in the world, which would significantly increase the number of reactors operating worldwide should all of these move into production. And you've got to remember, not only are places like China building plants, but places in the Middle East that are oil producers and oil exporters who are looking to build nuclear power. So I think that's also an interesting angle. We talked about Japan earlier. There's been preliminary approval granted for 2 reactors to restart, which is obviously going to be positive. It's positive top-line news for the market, given that a lot of the negative news began in Japan in 2011. And then finally, the supply deficit, the agreement between the U.S. and Russia, which lasted for 20 years, has expired, and that represented 20 to 25 million pounds a year being provided to the U.S.
Right.
Nuclear energy in general in the U.S., 100 plants are currently under operation or currently operable, with 5 under construction. So as much as there's a lot of negative news around nuclear power, plants are still being built because it's the cheapest, cleanest energy source worldwide. And you can see how significant and how important nuclear reactors are to the power base in the U.S. They represent over 19% of all power provided or electricity generated.
Okay.
The acquisition, I touched on this a little bit, but the acquisition consists of a number of different assets. First of all, the Sheetering Canyon Mill. It's one of only 3 licensed uranium mills in the U.S. I think that's very important. Back in the 1980s, there were over 40, and now there are only 3. And the difficulty of building a new mill at this stage is significant. Recently, a competitor sold a licensed and permitted mill site in Colorado, and basically stated that it would cost too much money in order to build a mill there. They said it would roughly cost between $150 million to $200 million for a 500-ton per day mill. The mill that we're acquiring is 750 tons per day. So that gives you an idea as to the implied value of our mill. given the pricing provided by the competitor. And once again, it's also scarcity value in this marketplace. You're talking about the cost to build a mill. There's also the timeline to build a mill. The timeline is roughly 8 to 10 years. So, for us to acquire a mill, not only for significantly less than what it would be worth, but the timeline within which to acquire and put into production is significantly shorter than it would be for us to try to do this from a greenfield perspective, or from anyone else to do it. So for us, we think it's a coup to be able to acquire these assets.
And I totally agree. Can you just give us some more information about how this mill looks like? Like, is it up to date, or do you need to kind of refurbish it, or invest a lot of more money, or what's the stage right now?
Sure. So you can see the picture on the right, the top right, is a picture of the mill. It is the youngest of the 3 mills that are currently standing. That said, it was built back in the 1980s. It wasn't run for very long, probably 4 months, in order to secure payment for the construction group, essentially. So there are no environmental liabilities, or very few liabilities on the environmental side associated with the mill. So I think that's very important. In terms of, it does need to be refurbished. It'll probably take somewhere between $25 million and $35 million in order to refurbish the mill. That said, there are ways for Anfield to get money from the state in order to mitigate some of those costs. For example, in other states, there are competitors in Wyoming who have received $20 million and $34 million, respectively, from the state in order to advance uranium products there. So we know that there's money available in Utah for the same type of.
So how many jobs will this mill create if it's running in full production? And what's the unemployment situation around this area?
Well, this is in a very remote part of Utah, so there are very jobs would be extremely welcome in the area, and there would be at least 50 jobs created at the mill itself. Don't forget, there are also mine sites that would actually have to be staffed, so we're probably talking 50 to 100 at each of those mill sites or mine sites. So, anywhere between 200 and 500 jobs could be created, and certainly a large tax base for the state, which would obviously help pay for ancillary services.
And you mentioned that this is, it's on this sheet, that it's only one of 3 licensed uranium mills in the United States. So how was it possible for a small, tiny company like Anfield to get its hands on this when there are bigger competitors?
Well, I think it's a question of timing, and sometimes it's a question of luck. There was another party that actually bid for the assets back about a year ago, an Australian company, and we thought that we'd lost the opportunity. Unfortunately for that group, the financing didn't come through, and so the assets went back into the marketplace. And just the confluence of the assets going back onto the market, the Utah Department of Radiation Control wanting this asset to be either put into production or closed down, put us in a great position, bargaining position, in terms of being able to acquire the asset for a relatively cheap price.
Yeah, I'm just wondering why companies like, let's say, Uranium Energy, which is a producer, they have also projects in the States, why those guys didn't come up with the idea to acquire this mill?
Well, I think at the same time, there are also the difference between what Uranium Energy is doing and what we're looking to do. We're talking about 2 different resource bases. For example, we're looking at hard rock mining, so conventional uranium mining, versus.
And they do ISL, right?
Yeah, they do ISL or ISR. A different project, and they're also focused in Texas. So, it's a bit of a distance away. So the mill itself probably wouldn't be conducive to working with the assets that it has in Texas.
Okay.
And so in terms of the other assets we're looking to acquire, it would be including a resource of 620 million pounds. Some of those pounds, 4.6 million of those measured and indicated pounds, are actually listed in the new resource, 43-101 compliant resource that we put out a couple of days ago. So now we've got a historical resource of 2.2 million pounds and an M&I, measured and indicated resource, of 4.6 million pounds. So significant amount of pounds, and we would look to those pounds to be the initial feed for the mill once it's up and in operation. Thirdly, there's an existing surface stockpile of ore of 415,000 pounds. That clearly has value. So that's mined ore but not milled. So it's very easy for us to simply put that through the mill once the mill is up and running. It's just a stockpile. So the cost to put that into production will only be related to milling costs. So it would be attractive for us to put that through the mill too. And actually it probably has market value too. We could probably sell it to somebody else who has a mill. And then one thing that's not listed here, there are 4 royalties that we've acquired. 2 of those royalties are with a competitor's mines, and one of those is also associated with a company called Ozarka Powertech. It's Dewey Burdock project up in South Dakota. There's a recent PEA that was put out by Powertech, which gives an implied value for that royalty, which is in the millions to us. So we think that it's appealing. We certainly believe that it has some value in terms of us. We can keep it, or we can actually monetize it. So it gives us some flexibility when it comes to providing further kind of financial stability to the company.
So
finally,
Powertech was just acquired or something like that?
Yes, there was a merger between Powertech and Ozarka, an Australian company.
Oh, right. Yeah.
Now it trades on the TSX. Yes.
Okay.
And then the assets that we're acquiring, there's significant exploration upside in the Henry Mountains area of Utah and in Lisbon Valley, the most prolific uranium mining area in the U.S. Over 78 million pounds of production came out of that area in the past. So we think that there's significant upside. Not only are we looking at the original resource that we're acquiring, but we'd also look to build up a larger resource, a much substantial resource, in order to extend the life of the mill. Page 8, the shooting mill. We've gone through a lot of these points already, but I think it's important to highlight the replacement cost value is estimated somewhere between $80.5 million and $200 million. The $80.5 million figure comes from a report in 2005, which was commissioned by U.S. Energy. U.S. Energy was a previous owner of the assets prior to Uranium One acquiring the mill, and the replacement cost in that report was $80.5 million. The $200 million number comes from the words of a competitor. I think I mentioned earlier, talking about selling of a licensed permitted site with no mill on it, and the cost to build that mill was between $150 to $200 million. So on a conservative basis, we're talking about a mill that's 50% larger than the mill discussed by the competitor. We'd say that the mill's worth at least $200 million. In terms of proximity, the mining assets are all within trucking distance of the mill, so that's an advantage to us. There are also other ways for us to look at those mining assets, whether we look to put a heap leach on site in order to create a concentrate, which means that we can ship even further and improve the economics on the projects. As I mentioned previously, the mill has very little environmental liabilities associated with it because it didn't run very long. And then, obviously, being located in Utah, it's a mining state, an agreement state, where we deal with state-level organizations related to uranium, the Utah Department of Radiation Control, or UDRC, versus the National Radiation Group.
Okay.
Page 9, you can see the picture on the right. Those are the leach tanks. I think they're wooden, so it's very different take. They're actually serviced by a group out of Oregon, so it's the technology is still very amenable to being used today. We talked about the size of the mill, a capacity of 750 tons per day, but the capacity to actually process even more. At the stockpile at site, we've got 250,000 pounds of the 415,000 pounds of stockpiled ore at the mill itself, so very easy to move that ore directly into the mill once the mill is up and running again. Facility's been on care and maintenance for over 30 years, but this is not a copper mill or a silver mill or a gold mill where you can just let things deteriorate with no one providing any kind of oversight. Because it is uranium, there has to be significant oversight, and the UDRC does a great job of following up and making sure that air testing takes place and water testing takes place, and make sure there's no environmental issues associated with either. So this is something that's been, been overseen for a number of years, and I think it's very important for the audience to understand that this isn't something that's kind of fallen apart. This is something that's in pristine condition, and it's staffed at the moment too.
Corey, what I not really understand is the mill produce only 7,000 pounds of uranium, and stockpile on the other side 400,000 outside the mill. Why did not produce or process this stockpile?
Well, because there's a process to go through. So first of all, I guess the stockpile has probably been accumulated over the past few years. So the mill has been on care and maintenance for a number of years, and in order to process it, first of all, you'd have to change the license from care and maintenance to operating, and then you'd have
so
to...
So this stockpile is not happened when was not happened when the mill is running, so this was happened after?
Yes.
The stockpile
yes.
is okay.
In anticipation of restarting the mill.
Okay.
Yes.
Okay, that makes sense.
So page 10, and once again, this is for illustrative purposes only, in terms of what the implied value of the 6.8 million pounds would be. Depending on the uranium price, we've listed a number of prices on the right-hand chart between $40 and $80. You can run anywhere between $200 and $400 million. But that is just for illustrative purposes only, just trying to give you a sense as to what the market value of the ore could be just from those small number of pounds. And obviously we're looking for a greater number of pounds, but we just wanted to kind of give you a sense as to where these assets could be valued ultimately.
Okay.
Page 11, stockpiles we talked about. And so I mentioned there's one at the mill itself, 250,000 pounds. There's a second one that sits in Lisbon Valley near one of our other mines, and that's probably about 165,000 pounds, and it's very close to other exploration targets. So not only would we look to move that stockpile onto the mill site, but we'd also assume that there's significant opportunities to increase the size of the stockpile potentially because we're near mine sites in the area.
One question. The stockpile is relatively low grade, especially compared to your resources, what you're coming up.
Yes.
Is this a problem, or is this an advantage compared to your mineral resources?
Well, I mean, it's not a problem. The good thing is that it's already sitting at surface. So the cost, there'll be a slightly higher cost to mill the ore, but don't forget we don't have any mining costs associated with it. So the margins should still be pretty reasonable. I think if we were mining it would be much more challenging, but certainly because it's already mined, we're in a much better. Page 12, talk about generating revenue strictly from the ore that we're acquiring. There are also a number of other ways for us to generate revenue at the site, and we've seen competitors do the same thing. Toll milling, which is basically the business of producing or processing competitors' ores or other peers' ores. We've already been approached by a couple of entities who have uranium assets in the area looking for toll milling agreements. I think it's important to note that right now there's only one conventional mill that's actually in operation, and that's owned by Energy Fuels. So right now Energy Fuels is the only game in town. So Energy Fuels could basically dictate what the pricing would be when it comes to toll milling agreements. With a second mill in place, obviously competition ensues, and therefore pricing dynamics change. So I think that's an opportunity for third parties to find a way to process the ore at probably a different rate or a more favorable rate.
Where's the location of this other mill that is already in production?
The mill is also in Utah. It's
okay.
it's not too far away from our assets in the Lisbon Valley area.
Okay.
So probably closer to our assets in that area than to our own mill.
Okay.
But certainly, it's centrally located. We can also generate revenue through a vanadium circuit. So vanadium is another byproduct of mining uranium. Its value is on a per pound basis is significantly lower than what uranium would be. With that said, if there's a significant amount of vanadium found in the ore, it certainly provides some upside in terms of revenue and cash flow generation. So it's something that we would certainly consider, given that a lot of the ore that we will be recovering is laden with vanadium. Third of all,
sorry, Corey, that I interrupt you. In your press release from Tuesday, you say also that you acquired this old mine, the Velvet, I think, or
Velvet.
and that in the past period when they produce or mill this mine, they produce also vanadium.
Yes.
But then you're coming up to your resources calculation. There was no vanadium in there. Is not? Do you not calculate the vanadium resources or? Yeah.
Well, I guess for us, we're basically working off of a previous resource. So in the previous resource, there was no vanadium discussed. So what we were essentially doing is confirming the previous numbers. I think if once we acquire the assets, we would look to determine what vanadium content would be associated with the uranium. But because we're essentially just confirming an old report, we weren't looking at a greater scope in terms of what would be found within the ore. So I think in the future we'd probably look to see what vanadium is there, but because we're looking just to confirm a previous report, it didn't make any sense for us to speculate as to what vanadium would be there. I mean, and it's also a timing thing too, because it would take significantly more time for us to get that resource in place.
Okay.
In terms of the alternative feed source, the competitor in the area has, I believe, at least 14 licenses to take essentially waste and put it into the tailings pond or the tailings area at its site and gets paid for it. So it's another way of generating revenue by essentially bypassing the mining the milling process at the mill, and it could be fairly lucrative. So as an option. And then finally, I talked about the royalty agreements that a little bit earlier. We have 4 in place. The most prospective in our minds would be the Dewey Burdock project with Azarga Powertech. Based on the PEA, it looks like it could be worth a few $1 million to us, obviously, depending on what production looks like and what production profile, how close it is related to the PEA itself. But we know that there's certainly value there, and I believe Azarga Powertech understands that there's value there, so there may be an opportunity for us to monetize that should we choose to go that route, or simply hold on to it in order to find another revenue stream for ourselves. We have 2 others which are with Energy Fuels projects. Obviously those ones are currently on care and maintenance given the uranium price at the moment, but certainly once those turn on, we'll be able to determine what value those would have to us. And then finally, the the San Rafael exploration project was recently bought by the former CEO of Energy Fuels, George Glazier, and a group, an investment group. This is the same group that bought the licensed and permitted mill site. So should that mill ever get built and revenue starts to be generated from that site, then we would have a royalty associated with one of those projects. Page 13, once again, this is for illustrative purposes only. Don't take this as gospel. These are simply forecasts based on general market information. So for example, you can see we show consensus forecasts. Those are consensus analyst forecasts from US and Canadian banks, probably from at least 2 months ago. The numbers may have changed slightly since then, but you can see that this is where the market assumes the uranium price will go. So given that it may take about 2 years for us to refurbish the mill and move into production, that's why we're looking at a 2017 start date in terms of where we expect the uranium price to be at that point. So based on where we think production could go and could start, we're looking at revenue of $33 million in the first year, 2017, to up to 67 million as we improve production moving forward and get to full capacity production.
Corey, just quickly, I'm not sure if you have that information, but this consensus price, is that for the spot price, for uranium spot? Because all of us know that the spot price doesn't really matter, because uranium is, that the price of uranium is bilateral between the company and the producers.
Sure.
Well,
so I completely understand that. I think for us, we're trying to be conservative, so we're saying this is we'll argue this is term. If this is spot, given the historical relationship between the term and spot price, the term price tends to be some percentage higher than the spot price. If we're arguing that this is the term price, then obviously, this is the low end of the market. If it is the spot price, it's never been made clear on the analyst consensus numbers. If this is the spot price, then clearly the term price be significantly higher, and therefore our revenue and EBITDA numbers would be significantly higher.
Yeah, from my feeling, this should be a forecast for the spot price, but okay,
sure.
We don't know. Okay.
Yeah. Either way, I mean, if these are the lows, because if this is the spot price, it means the term price is probably higher.
Yeah.
But if this is the term price, then at least we know that this is the minimum that we should be looking for as we move forward. But once again, the term price is the significant part of the marketplace. The spot price represents 10% of the overall market, 10 to 15%. So,
do you have any explanation why there will be, if we follow this forecast, there will be a bump in the in the uranium price from 0.15, $40 where we are right now, up to the 65, 68 level, but then for the next couple of years it's fairly stable, just shy of $70. Is this because they're planning, or they're forecasting that a lot of other uranium will come on the market because more companies will get into production?
Well, I think forecasting, let's talk. We're 2014 now. The crystal ball, you have it there.
Yeah, the crystal ball.
That's exactly it. That's exactly what happened. I think the same reflection starts in 2019 and on.
Right.
I think once you kind of get 5 years plus out, it becomes very, very difficult to start determining what the price would be. So I think a lot of guys are saying, look, once we get 5 years out, let's just talk about, it's probably going to hold at a steady state at worst and perhaps go up. But as to how far it goes up, that's another question. But I think they feel much more, comfortable looking at kind of a steady state at that point until there are more data points associated with it. Because I know that utilities are starting to buy, or will start to buy in the next few months to fulfill contracts for 2017, 2018, maybe 2019. So you'll get a better sense as to that point what the potential numbers could be going forward.
Yeah. But even with these low numbers, let's say that's low forecast numbers, you as Anfield, you feel pretty comfortable, right?
Absolutely, absolutely. I think we could certainly, be revenue generating at that point. We certainly believe we can be cash flow generating. But once again, this is all based on, this is just general numbers. We need to make sure that the economics show the same type of ramp up, the same type of valuation, because we need to do economics on the projects. This is just from looking at what the consensus numbers are, looking at the capacity of the mill, and trying to determine, based on old reports provided by Uranium One, what the economics are related to the mill or with the mines that we're looking at. So, these are very kind of general numbers, and I don't want anyone to take these as gospel, but we are very comfortable that, at the revenue numbers, the prices provided by the industry, we're very comfortable that we could be cash flow generating at that point.
Okay.
To page 14, once again, illustrative purposes only, just to give you a sense as to where we trade vis-a-vis our peers. When we talk about what we need to do to close a transaction, we need to get essentially $5 million US in the bank or in the till in order to close the transaction. Given the market cap, our market cap's obviously a little bit lower than $9 million today, but we'll just use the same numbers that are on this chart. We have an implied EV of roughly $18 million, an M&I resource of 6.8 million pounds. When we look at what the average company is trading at, it's roughly $6.40. It's probably a little bit down from that point now, but I think everybody's kind of slid down. But when we look at what the implied value at the average price would be, we're looking at our stock price probably 4 times to 5 times higher than where it sits today. So I think the point here is that given the assets that we're looking to acquire, given where we are vis-a-vis our peers in terms of production, near-term production, we're trading significantly lower than anybody else. I think some of that's a function of nobody really knowing us. I think some of that's a function of us not actually closing the transaction yet. But once we do, we think that we should be able to capture some of that disparity in the marketplace. Maybe we shouldn't be trading in line with the average, but certainly we should be trading above where we are today based on what assets we have coming into the company.
Yeah, I feel the same. So I'm following Anfield for a couple of months now, and I think my first recommendation to my subscribers was around the 45-cent level. And I was kind of, it was interesting for me to see that even if the uranium price in the last couple of weeks had moved up, that you stayed flat or even moved down. And of course I made up my mind, and thought, okay, so the asset is good, and so everything is in place. And my feeling is that the market just doesn't believe that you're going to be able to finance this transaction. And so to me, this news release today is a really critical step, which you achieved. And I keep fingers crossed, that finally there will be a signature on these paperwork. And then the market should not have that, but that's my humble opinion. The market should finally come to the conclusion that Anfield is way undervalued.
I agree. But the market, the market speaks, speaks for everyone. And basically, the consensus seems to be that there's some skepticism around our ability to close the transaction. And I think it's just not an issue with Anfield itself, but I think it's also the fact that another party had attempted to acquire these assets and failed, and wasn't able to get the financing in place. So now the market's saying, well, given how tricky it was for the first group, we can't really give credit to the second group until the transaction closes. So it's understandable. I mean, it's unfortunate for us that we're the second group coming in, but that's the reality. But I think for us, lining up a lender with the expectation of having a financing in place, I think that will make the street much more comfortable, and then we can move forward, and then we'll probably get value for the acquired assets.
Yep, I agree.
So page 15, so speaking of the deal itself, deal terms. So at closing, we have to provide Uranium One with $1 million in Anfield shares, it's US dollars. We also have to provide $2.5 million worth of Anfield shares, US, to US Energy. US Energy will have those shares in escrow and released over 36 months. And then we have to provide the $5 million in cash to replace a portion of the reclamation bond associated with the Shooting Canyon Mill. So that's the money that we're looking to secure now, because that's obviously the big hurdle. But that's the only financing or cash-related payment we have to make at closing. The other payments we've been able to defer fairly significantly. So for us, I think we're very comfortable just getting past this hurdle and then looking to secure funds or get into production prior to having to make any future payments. You can see post-production at Shooting Mill, we have to provide a payment of $2 million to Uranium One on July 1st of 2017. Our aim is to be in production by that time. And then we have to provide Uranium One with another payment July 1st of 2019 of $2 million. So once again, we've deferred those cash payments for a number of years in order to find ourselves in a better financial position, but obviously been in a position to advance projects to the point where either we're in production or we're near to production. And then once we've been able to get into production or we're close to production, we also have to replace the remaining reclamation bond, which right now is sitting at $9.3 million in total. We'll be paying $5 million of it, and we'll look to pay the remainder in 2 years.
Okay.
So let's go to page 17. we talked about the assets themselves and where they're located. You can see that prior to looking to acquire the Uranium One assets, we had some holdings in the Lisbon Valley area. Obviously not as significant as the assets that Uranium One held, but we did have a little bit of a foothold. But you can see how complementary the Uranium One assets are to our current assets. And as I mentioned before, Lisbon Valley is the largest uranium district in Utah, and has produced 77 million pounds of uranium at 0.3%. So very good grade for the U.S. The ISR producers tend to produce using ore which has grades of 0.1 or less. So when you look at 0.3 to 0.4%, it's actually quite significant. It's not, once again, it's not Saskatchewan numbers, but this is a place where production has taken place. So a little bit different. And there are a number of
Corey, is this in general in this valley, is this more or how deep is the resource normally in this area?
Well, the resource isn't significantly deep. I think you're going probably maybe a couple hundred meters down. Mm-hmm. So it's not they're not necessarily deep deep resources. And there are a lot of deposits. What you find is that you don't necessarily find large deposits. What you find are a lot of pods, probably 1 million pounds or less. So those seem to total up to significant numbers. You can find ones that are bigger, but there are a number that are 1 million pounds or less.
Mm-hmm. Okay.
And we talked about the resource before, but you can see here the first two, Velvet and Wood, that are listed are the two that are associated with the new 43-101 resource. And so there's obviously some inferred resource in place too, which is probably between 630 and 640,000 pounds. So those could also be converted into M&I resource, which would push the size of that resource of about 5.3 million pounds. The Frank M is very close to the mill. It's lower grade, 2.2 million pounds. So that moving into production would obviously be contingent upon having a much higher uranium price than we have today. The Finley tank is obviously located in Arizona, and it's got a pretty decent size and just under 1 million pounds. But the Wait project is interesting because we own 50% of that project. The other 50% of that project is owned by Energy Fuels. Energy Fuels bought the other 50% probably in the fall. So we are essentially partners with Energy Fuels on that project. They're pressure pipes, so they're long cylindrical pipes found in Arizona in an area that is not an area that's where uranium is prohibited from being mined. There's some areas in Arizona where you can't mine at all when it comes to uranium, but this is in an area where you can actually go in and produce. And Energy Fuels is producing in the area at the moment. This is the one area where Energy Fuels continues to produce ore. Page 19 talks a little bit about the Velvet Wood. You mentioned before, Joe, that 4 million pounds of uranium and 5 million pounds of vanadium had been produced in the area. So once again, we'd expect to see some more vanadium coming out of this project. So the idea of adding a vanadium circuit to the mill makes a lot of sense because we could certainly exploit that and generate some further revenue and cash flow from production at this mine. We also have a permit in place to potentially put this mine into production within the next 12 to 18 months. So that would obviously consist of us shipping ore to another mill, because the refurbished mill shootering would not be complete by the time we can get this up and running. But we obviously have alternatives. There are 2 other standing mills in place that could certainly take the ore that we could produce.
Yeah, you just mentioned that. What is your timeline or the term you need to refurbish the Shootaring mill?
Well, we're looking to get into production by 2017. So given that we're essentially in 2015, we're talking about a 2-year.
2-year.
build-out.
Okay.
Yeah. The Frank M project we talked about earlier, right next to the mill. 2.2 million pounds, a low-grade resource, but certainly a resource which would be appealing once the uranium price is significantly higher than where it sits today. But because of its proximity, I think it's very very appealing to us. Should uranium price move in the direction we'd like. Page 21, the Henry Mountains exploration target. There are significant targets for exploration in the area. Energy Fuels has a project in the area which has a 20 million pound resource. So we know that there's significant ore in the area. So we believe that given its proximity to the mill, this would be a great place for us to exploit and find a resource that would be high grade and amenable to mining at the mill. Page 22, Brescia pipes. We talked about this before. The weight product, it gives you an idea as to what the shape of a typical Brescia pipe would be. You can see it's very long, cylindrical, vertical mining. So you're basically digging down deep, straight down in order to get the ore. The great thing about Brescia pipes, you can see the grades are 0.5 to 1% U3O8, which is fairly high, and in some cases significantly higher than what else you find in traditional and conventional mine sites. So you can see the footprint on the right-hand side is quite small because it is such a narrow surface. It's a deep-rooted pipe, so you can actually do very little surface disturbance in order to exploit this type of mine.
Okay.
We mentioned we've got a 50-50 joint venture. It was no longer with Rose Petroleum, but it's actually with Energy Fuels. Energy Fuels bought out our previous partner, and our portion of the inferred resources just over 440,000 pounds. On to page 25. So this is just general market information. As we talked about in the past, there's so many reactors currently operating. And there are a significant number of reactors which are in place in terms of what could potentially be built out. You can see that over 12% of the world's energy production comes from nuclear, despite the fact that there's been so many negative stories, and the fact that Germany is actually moving away from, yeah, exactly.
Not my
moving
fault.
Away from,
Not my fault.
Fair enough. They're moving away from nuclear power, but there are also other countries now looking to pick up that slack. As I mentioned, the Middle East is getting involved, India, China, Russia, clearly, even Brazil is looking to exploit this resource. So, you can see that 13 countries rely on nuclear energy to supply at least 25% of their total electricity. So it's a very difficult thing to move away from, given the cost of the alternative. So, I think it's something that's here to stay, and the fact that there's significant build-out continuing, I don't think that renewable power or renewable energy will be, the answer to replacing baseload power that comes from nuclear. Now, page 26, we talk about what's being built. I think I mentioned 72 plants under construction right now, 28 of those, almost 40% coming out of China. Planned and ordered reactors, 174, and then 299 proposed. So, if all of these were to get into production, you would more than double the number of reactors that are in place today. So, as much as there are negative headlines about uranium and nuclear power, the world seems to be forging ahead, trying to put this type of power source in place because of its reliability, because of its the clean power aspect, and baseload power. I mean, renewable energy can't provide baseload power the same way that nuclear.
Yep.
Page 27, just talking about the directors and officers of the company. I think the one person to highlight here would be Don Falconer. Don Falconer has been in the business for 35 years, has worked in both the nuclear sector and on the uranium public market side. He's been involved in sales and marketing of uranium, and I think he's a great person to have involved in the company because, as we move forward, we will be looking to secure some contracts, and I think Don will be the person who has the contacts and relationships in order for us to do so. But obviously his experience on both sides of the market is second to none, and for us to have someone like that on the board, I think it was quite a coup for us to get him.
Let me ask you a question. So you have a pretty significant BOD, Board of Directors, but you're the only guy really working. Like you're the only management CEO, so you don't have a CFO, no COO, no whatever?
Right. Well, we've got a part-time CFO, but we're going to be looking to upgrade. Once we get this acquisition under our belts, we'll be looking to obviously build out the team.
Yeah, you need to, and because just with this financial transaction, I think you definitely need a full-time CFO who is experienced in that area.
Oh, absolutely, absolutely. I think for us, we don't want to until we actually have the assets, under our belts. We don't want to actually start spending money that we don't have.
Right.
But once we are in the position to start moving the product forward, we're going to look to fill the slots that we believe are necessary to be filled. I think an important point to make, though, the fact that it's just me as an officer of the company, essentially. I think that it's important to understand that we have a very active board. I speak to these board members at least once a week, probably more, if not once a day, and they're very actively involved in the business. So it's not a case of me operating in isolation. We have a very, very active board, and there's a lot of interaction that takes place on a daily or weekly basis, or somewhere in between. And that's the end of the presentation.
Okay.
So that's
Joe?
No, I think it was a good overview about the company, and I think my questions are or you answered my question what I gave. What I really interrupt you, I was really unpolite. Sorry about this, but
oh no, not at all. I
think that's just your way. Usually that's my job to be unpolite.
That's right. That's right.
No, I think it's great to stop, with our questions. I think we should certainly address the questions when we can, because we want to make sure that especially if they're in context, it's the best place to really address, because somebody may have the same question. So, I think it's great to stop and just discuss whatever points are necessary at the time.
Yeah.
Nicole, there's only one question from my side too. So, okay, you have this one lender on this hand that you can finance. Hopefully the transaction, but then you need more money to refurbish the mill, have other paying milestones. So what is really the plan, or how is the plan to can finance all the whole project that you can bring this mill in production?
Well, so there are a couple of things that I mentioned earlier that there's state money available to us to obviously help finance.
But state money coming always with also equity. You must show some equity. The state coming with the other part of the equity or something.
No. The state provides what are called industrial development bonds.
Okay.
So those bonds are kind of long-term, low-interest rate bonds.
Okay.
As I mentioned, there are a couple of companies that are in Wyoming who have secured those types of bonds from the state. One secured $20 million. Another one secured $34 million.
Mm-hmm.
So we know that's available. Secondly, the lender that we're using today, or we're looking to use, also understands our plan moving forward and has expressed an interest in helping us from a lending perspective to fund further development of the assets. Thirdly, obviously, we're going to look at the equity markets because we're an equity company, so we'll look to do some funding through that vehicle. Fourthly, we have the ability to monetize some of the assets that we do have. As I mentioned, the royalties have value. The stockpiles likely have some value too. Then we can also try to get into production prior to having the mill refurbished using, for example, the Velvet Wood Mine. We can start production there, and we can either toll mill at one of the existing mills, or we can simply sell the ore that we produce there to one of the mills. So there are a number of ways for us to generate revenue in the near term, or generate enough money for us to refurbish the mill, we believe.
The contract, what you do with the lender, has the lender the potential to finance the whole thing?
He does not have the potential. There's no right of first refusal to go forward, but the lender has expressed an interest in doing that, given that he knows that the project needs to be financed. Some of it certainly through debt. The lender was certainly it wants to build a relationship with us, which isn't just a one-off. Obviously, the best way to get further business is to do well by us this first round, and then hopefully be in the position to participate, or at least put their hands up for the following rounds.
Mm-hmm. Okay.
Okay. Yeah, so I think because you talked in detail about the uranium market overall, and I think we're all on the same page here, that uranium over the next couple of years will go up. Yeah, the price of uranium has to go up because there will be more nuclear plants coming on stream. As we all know, yeah, that's public information. It's all around the world besides Germany. So I have no doubt about the uranium price. And what I really like about Anfield is that it's not only a uranium exploration or a company. I really like this team up with this mill. Yeah, they have the assets, the mill, and this is, to me at least, that's unique, especially in the uranium sector. Yeah, we have a couple of precious metals companies that are going down the same way. Yeah, that they have some assets and they try to acquire old mills and refurbish them. So I think that's a very prospective strategy. And at a market cap of below 9,000 would be really low. 9 million dollars. I think it's really worth considering and then to invest into that company. If you really want to be, if you're risk averse and don't like to speculate, I would wait for really that this financing agreement is signed. Yeah, because then to me there's almost no risk, no foreseeable risk. But of course you get a way higher leverage if you jump on the stock right now. That's my humble opinion.
Right. That makes sense. I think it's I think it's important to note that the uranium price is moving in the right direction. I think that uranium market's very small, especially when it comes to junior producers or near producers. I think it's important to back whatever horse you like to if you like the space, but you have to see what the potential upside is. Guys who are in production today are facing challenges because the uranium price isn't necessarily high enough to sustain production. I think the way that we have the project set up, assuming all goes well, is that we're going to be in production. We're aiming to be in production around the time when the uranium price really starts to lift. So I think that we're almost bypassing the next couple of years of uncertainty or volatility in the price. So we'll be in the position where hopefully some of that short-term, the short-term challenges have been kind of mitigated, and everyone's seeing kind of a more positive view in the uranium space.
Okay, so Corey, thank you very much for taking the time. That was really, really impressive. A lot of good and detailed information. The website of the company is www.anfieldresources.com. You have the presentation available for download on the website, is that right?
We have a version of the presentation.
Okay.
We're actually updating it now, so.
Okay, good. And also, there's your contact data, so when any investor is interested talking to or get some more information, he can probably call or email you directly, Corey, right?
That sounds great, yes.
Perfect. So, yeah, thank you very much again. Thank you, Joe.
Thanks,
Corey. And, I keep fingers crossed, that the lender is going to sign the documents, and then we are going to hook up again. And, see what you're going to do then. Thank you very much.
Perfect. Great. Thank you, guys.
Sure.
Take care.
Thank you.
Bye-bye.
Ja, ich möchte nur noch mal ganz kurz zusammenfassen. Also ich glaube, wir haben da eine wirklich interessante Story. Ich hatte die Anfield ja schon vor, ich glaube, 2-3 Monaten bei einem Aktienkurs von 45 kanadischen Cent das erste Mal Ihnen vorgestellt. Seitdem ist zwar der Uranpreis hochgegangen, der Aktienkurs von Anfield leider runter. Wir sind da so wahrscheinlich irgendwie 33%, 40% im Minus aktuell. Ja, und aus meiner Sicht liegt es wirklich daran, dass der Markt einem kleinen Unternehmen wie der Anfield mit einer Marktkapitalisierung von unter 9 Millionen Kann-Dollar einfach nicht zugetraut hat, diese 5 Millionen zu stemmen, die für den Abschluss dieser Shootaring-Mill-Transaktion benötigt werden. So, auf dem Weg ist jetzt mit der heutigen News Release Anfield auf jeden Fall schon ein gutes Stück weiter. Ja. Nochmal ganz wichtig, es ist im Moment nur eine Absichtserklärung. Ja. Es ist noch keine Tinte auf das Papier geschrieben und der Vertrag ist nicht in trockenen Tüchern. Das heißt, es kann dort auch noch was schiefgehen, wobei wir haben nicht drüber gesprochen. Ich denke mal, dass Anfield und insbesondere Corey da sicherlich auch noch eine andere Möglichkeit in der Hinterhand hat. Aber dennoch, wenn Sie wirklich auf Nummer sicher gehen wollen, dann warten Sie bis gegen Ende diesen Jahres, Anfang nächsten Jahres. Das ist auf jeden Fall die Zeitvorstellung, die Corey Diaz hat, bis dieser Kreditvertrag unterschrieben sein sollte. Und dann ist schon mal ein gutes Stück Risiko wieder aus dem Papier raus. Ich selber, Sie wissen, ich bin ein bisschen risikobereiter, ja manchmal vielleicht auch etwas zu viel, also ich würde es mir auf diesem Niveau um die 30 Cent, kanadische Cent definitiv nochmal anschauen, ins Depot liegen, wenn Sie schon Stücke haben, im Zweifel sogar nachkaufen. Also ich sehe, dass wir da richtig gutes Potenzial haben, um dann auch von einem steigenden Uranpreis, von dem wir alle ja ausgehen, einen sehr guten Hebel drauf zu haben. In diesem Sinne bedanke ich mich und wünsche Ihnen noch einen schönen Abend.